Hello and good morning. Holly Shields here, live from Kalkine Studio in Sydney, and you're watching Daily Trades, a show where we share with you a glimpse of the Australian share market opening trade scene, along with the global and domestic drivers triggering the market momentum. Well, today's been deemed Sydney Freedom Day, but whether that's reflected positively on the market is up in the air at the moment, as the ASX200 has fallen at the open. The S&P ASX200 index was down 0.8%, and on top of that, gambling and entertainment company Star was down 15% to $3.64 following reports of malpractice. A heavier blow still, tech company Xero was down 3.6%, and so was buy now pay later giant Afterpay. Plus, tourism company CIMIC Travel Group was trading 3.8% lower. On the upside though, petroleum company Ampol climbed 4.8%, as so did insurance company 3.3%, and health supplements company Blackmores was up as well 2.3%. Over to Wall Street now, and the Dow Jones edged 0.03% lower, while the S&P 500 fell 0.19%, and the Nasdaq Composite dropped 0.4%. US stocks finished lower last Friday after subdued employment data and inflation fees hit the confidence of investors. To the import newsmakers now, and CIMIC Group's subsidiary engineering company UGL has been awarded 2 contracts in the resources and utility sectors with a total revenue of $135 million. Under the first contract, UGL will provide maintenance, projects and turnaround services for existing clientele. Viva Energy in Victoria over a 2-year period. Under the second contract, it'll design and construct 2 greenfield switching stations and construct approximately 65 kilometres of 330 kilowatt transmission lines over 18 months for Powerlink to connect the McIntyre precinct in southwest Queensland to the transmission network. CIMIC Group Chief Executive Chairman and Chief Executive Juan Santamaria said that UGL has a national presence, providing specialised engineering expertise to clients in the resources and utilities space. The company is pleased to again work with Viva Energy and Powerlink to support critical infrastructure for the communities around the country. And moving on, health and beauty company Australian Pharmaceutical Industries says it expects to exceed the previous profit guidance it provided in July, despite a broadening of COVID-19 lockdown restrictions in New South Wales and Victoria. The takeover target says it expects underlying earnings before interest and tax will be about $70 million and reported unaudited EBIT about $28 million for the full year ending 31st of August. API Chief Executive and Managing Director Richard Vincent said that the company reported a stronger trading performance through its suburban and regional Priceline pharmacies, as well as online. They also experienced elevated trading volumes through their pharmacy distribution business that were not anticipated. API also said the sale of its New Zealand pharmaceutical plant is expected to occur in the first quarter of financial year 22. And for this reason, its reported EBIT remains in line with previous guidance. API will report its full-year results on the 28th of October. Now, before we look at some other important newsmakers, it's time now for a short break, but stay tuned because I'll be right back around the corner.
Are you sick of paying through the roof for a product that doesn't truly suit you? Want to make sure that you get the best deal possible? Then let us help you. At Kalkine, we do the research, run the numbers, and take a look at the true value of the product to make sure that you're informed as a consumer. Whether it be the best streaming service to suit your binge-watching desires, the right broadband and NBN plans to ensure a no buffering experience, saving money with your energy, gas, and mobile plans, or treating yourself with a bit of retail therapy. We will break down all the details about every single deal, what's in it, how much it costs, and whether it's worth it for you. If you want to save money and stay informed, then subscribe to the channel and press the bell icon, as we will be rolling out a stack of content to keep you in the know.
Welcome back. Holly with you live from Sydney. Moving on now to the next update coming to us from engineering and infrastructure management service provider Downer EDI, which has entered into an agreement to sell its open-cut mining east business to PT Bukit Makmur Mindri Utama, a mining services provider in Indonesia. The sale will occur for $150 million, and this transaction includes the transfer of assets, liabilities, employees and contracts comprising the open-cut mining east business to PT. They have paid Downer a deposit of $16 million, with the remainder of the purchase price payable at completion. Downer Chief Executive Grant Fenn said that an important part of its urban services strategy was the exit from its capital-intensive mining business. The sale of open-cut mining east is the last step of this process and follows the divestment of open-cut mining west, Downer Blasting Services, underground mining, Otravo and Snowden consulting service business, and its share in RTL Mining and Earthworks joint venture. Completion of the sale is expected before the year's end. And meanwhile, Insurance Australia Group is reviewing a judgment by the Federal Court of Australia in the second business interruption test case handed down on Friday. It'll consider whether to appeal the decision. The federal court was found in favour of the insurers on a significant number of policy wording questions and for policyholders on the other questions. IAG said the judgment was detailed and a comprehensive analysis is required to access the impact, noting it'll vary by insurer. The federal court has set aside time in November of this year to hear any appeal in the full Court of Federal as a part of the test case process to enable any appeal judgment in the federal court to be finalised before the end of the year or early next year. All parties have been granted leave to appeal. Insurance company IAG said it'll consider the potential impact on IAG's business interruption provision announced in November of last year, and any required updates will be provided at the appropriate time. And lastly, Ampol has entered into a binding agreement to acquire Z Energy for $1.97 billion, following weeks of due diligence and negotiations between the two companies. Under the agreement, Ampol will acquire 100% of shares of Z Energy for a cash offer price of $3.78 a share. Ampol's offer includes an adjustment mechanism where Ampol will pay an additional cash amount of 0.055 cents a share for each calendar day that completion of the transaction extends beyond the 31st of March 2022, up to a limit of 10 New Zealand cents per share. The Z Energy Board of Directors have unanimously approved the scheme and unanimously recommended that Z Energy shareholders vote in favour of the deal. The takeover is still subject to New Zealand Commerce Commission clearance and Overseas Investment Office approval. Ampol has committed to divest its existing New Zealand business, Gull, in the future to ensure any potential competition law issues are fully addressed as a result of the scheme. Well, that is all for now on the early trades, but stay tuned to Kalkine TV because we have many more shows lined up for you today, sharing live updates across economies, markets and sectors. Holly Shields signing off.